started, most certainly. Yeah, I get it started. Just ride the way, if you ride the way, shawty, ride the way.
What is going on? It is Solo E, and in this video I am going to get straight to showing you guys the ultimate unlimited strategy, scalping strategy that you can use in your Forex, crypto, any type of market charts. And we're going to do a full walkthrough. I'm gonna show you guys the perfect setup, what we need to see, how to structure it, and then we hop in the actual charts, show you what it will look like in the charts, and then of course you guys can start trading it. So make sure you do me a huge favor, comment, subscribe, and of course drop some gems down there if you guys like these type of videos, because I will continue to drop these type of videos. Right, so first and foremost, I want y'all to understand how market really works. So when we are looking at market, there's an essential way that we have to structure it in our minds, and what I simply mean by that is we have to understand the overall bias. Now, the overall bias is what we see off the daily or the weekly time frame. And basically what I mean by that is if we're on a daily time frame and we're looking through that, or even the weekly time frame, and we're looking through these time frames to see the overall bias, we got to understand, is this market either in a demand area or a supply area? Essentially what I really mean is if we know this market is going down, breaking lows, and you just see it breaking the previous lows, this definitely means the market is a downtrend. And since this is a downtrend, we can finesse it in two different ways. One way we can do it is obviously ride with the trade. Sometimes we get in the trade too late and we see market doing this. So I'm gonna teach you guys a way to basically get in at the right time, but I'm gonna also teach you guys when this move will happen so you can stop worrying about market reversing on you when you are going down. All right, so first and foremost, when we see market structure and anything in the market, we have to look left. Looking left is going to give us the most valuable information that we can obviously use. But here's the secret to it. When you are looking left, I don't want you to go too far out. I honestly, if you're on a daily or the weekly time frame, I just want you to look left a couple clicks out and see where is the most recent low. So if we notice that we have a weekly or daily low presented here, this is all we're going to do. If we can see the market is actually going down, we want to basically sell it until it gets to this low. What happens is this is where liquidity rests. When liquidity rests at this actual low, we have to make sure that market grabs that liquidity. And what I simply mean by that is we just need to see market past that most recent low. This is the mistake that 90% of traders make. They buy it here and think this is my support level. They're going to go ahead and look for that buy setup and then realize that they get stopped out. Well, essentially, before we even get in this trade, we have to make sure market actually breaks past this low. There is a way, and I'm going to show you guys that you can actually get in at the right time and still not get in late, because of course a move can happen inside here where you might see an opportunity and now you're like buying it, but then you still realize it's still shooting down. So I'm gonna be showing you guys that too. We want to look a couple clicks left. If we see a low, then perfect. Now let's say a situation is where market is doing something like this, where we have absolutely no low to present a left side. Well, this is the exact same thing you would do. You will still look for the most recent low, meaning if market was to break to the upside to create a new settlement in the market, which is here, we still want to see market past that. So if we can see market past any presentable low, then we will basically be looking for our setup. Now this setup right here has to be presented off of a daily or a weekly time frame. After that is present, we can then now head to a lower time frame, which is the 1 hour, 30 minutes, and even the 15-minute time frame. These are all the time frames that we're going to mainly be focusing internal structure, meaning what is happening inside here, we need to actually see it in these time frames in order for us to get in for a buy. So now, since we understand that, this is what we need to see. Once we establish market breaking out of that daily low, we can then now sit here and say liquidity was grabbed. And if that is the case, we can now go on that 15-minute, 30-minute, 1 hour time frame, and we can look for a move where market finally creates a high. Once we get that first high right there, we want to then now look for market to actually grab liquidity going up. So what is the whole moral of the story here? We first need to see liquidity be grabbing on a daily time frame going down. After that is complete, we then need to see liquidity being grabbed on a smaller time frame like the 1 hour, 30-minute, or the 15-minute going up. Once that's complete, then that is when we know there is a potential shift in the market, and this is where we can now enter for a nice scalping entry to a sniper entry. So what we can then now do is see liquidity is being grabbed there. Now once liquidity is grabbed, this is what you're going to see in the market. It's going to be one or two things. The one first move that is common is when market breaks a support level or resistance level and then act as a resistance or support. So in this instance, we see that this could be a support resistance level, order block level, or demand level, supply level. All we want to simply do is wait for market to tap in that same area again to come at a demand level, and then from there we can look for market to buy, and then we can ride that trade for 1-to-1, 1-to-2, and 1-to-4, and so forth. Another great opportunity that you guys can look at is once market grabs liquidity, you simply want it to come back down in a demand level. Once it does, from this impulsive wave, you can then now look for your entry and buy. It is completely that simple. But I'm gonna be honest with you guys, you probably hear this so many times, but you don't actually read it properly. You guys hear the breakout and retest strategy where market breaks out, pulls back, and a retest, right? This is the break, this is the impulsive, the retest, and then that. Well, this happens all the time, but you got to know when to actually catch it, and this is how you catch it. So let's go into the live market. Let me show you guys how this look in the live market so we can get straight to it. All right, so here we are now on the live charts, and let me show you how to actually use this, focusing on what is in front of you. So we start on a daily time frame or even a weekly time frame. I want to first look left. Clicks away would be something here. If market is currently here, clicks away, something here. So what we're doing is we're just grabbing the most recent low that we can see off a daily. We see that is this low right here. We notice that market never tapped past this low until here. So right when we seen that, that is when we now want to get ready to look for a setup to buy. Now I know I talk about trading with the trend, but we all know sometimes when you trade with the trend, it still goes against you. This is why. Even though if you sometimes trade against the trend, it still goes against you. This is why. So we wait on liquidity to be grabbed. Why is this so important? Is because the banks know that a lot of traders like us have a lot of limit orders, buy limit orders. We want to take a lot of buying setups here without really knowing the full concept, but we need to make sure we understand that first they must grab some liquidity so they can make more money before they actually go this way, and they will. They need to grab liquidity first, and then they're going to go back up so they can make even more money. So what we're going to now do is we see market have grabbed liquidity. Now we just need to see the internal moves. So we can literally skip past a lot of other time frames. You guys don't need to be so focused on a daily to 4 hour, 1 hour. You can literally go from the daily straight to the 1 hour because the 4 and the daily correlates very perfectly. You can go straight to the 1 hour, 30 minute, 15 minute and start looking for these setups. So now as we hopped on a 1 hour time frame, you guys see clearly right here is that most recent high that I was talking about. This is where liquidity is now grabbed going this way. So what does this mean? Well, for anybody that is actually trading once again with the actual trend, they're selling right here. They might have a limit order right here. They might have a potential opportunity because they see something here and they're selling it. Well, this is the exact same reason why I said sometimes trading with the trend doesn't always work, and sometimes trading against the trend doesn't always work, because it has to grab liquidity off the daily first, and then it's going to grab liquidity off the smaller scale. So you have to understand the actual segment that the market is trying to play games with. It's going to do it higher, then it's going to do it lower. That's the basic greatest way to put it down when we're looking at structure off of different time frames. So if we go from that daily time frame to the 1 hour time frame, we notice this high right here. It needs to grab liquidity. We know the market is going to play with us, so we're not going to do anything. So instead, what we're going to do is wait for market to actually break out of this high. Once it breaks out of this high, we need to see market come back down to right around this high. Once we see market come back to this high, this is a simple opportunity for us to trade, and this is what we're going to do. As you see, market just came and tapped this high right here. Now this is where the most important thing comes in play, and I have to say this for last: entries. How can we know this is the actual area where market is going to now go up? We're going to take two things into consideration. One is going to be my Fibonacci retracement. This is by far the best, hands down, scalping strategy, intraday strategy, swing trading strategy you can put in your actual strategy, which is the Fibonacci. So all we're doing is taking the Fibonacci from anywhere where you see a black or blue or green or red on a 1 hour, which is here. We notice this right here is technically that most recent low, not here. Every time you look for a low or a high, you will either see a red and a green candle. That is a settlement. That is known as your most recent low or high. So we want to actually draw fibs from here to here. Right when we draw these fibs, all we're simply doing is waiting on market to come below that 50% mark at a demand level. So now that we see that is possible and we see that had happened, we can now go ahead and look for entry. So all we're going to simply do is head down to a smaller scale, like a 15-minute, even a 5-minute, to look for entries. So now we're on a 5-minute time frame. So now being on a 5-minute time frame, we're going to do the exact same thing we just did off the daily time frame. Notice how this was my actual low, and we finally grabbed liquidity again here. So what I am simply looking for is one simple move. If I can spot an engulfing candle right after it grabbed liquidity, which it did here, you guys see an engulfing candle here and you see an engulfing candle here, we're going to simply now look for a double bottom. If we get that, we can then now simply go ahead and long this position. We can have our stop loss a couple pips out from this entry, and then we can take this trade going back to the 1 hour time frame, and we can look for our Fibonacci levels, which is the -27 to 618, and having that place. Why I'm doing this is because this Fibonacci is literally the cheat code for my TP levels. It literally helps me find entries as well if I'm doing a limit or sell or buy limit order. So I'm going to go ahead and take my final TP here. Even though this is ultimately a 1 to 4 RR, I am still going to make sure I minimize this trade as much as possible. So what I mean by that is I am going to take my trade, my first TP, to this high, and then you guys can either do two things. You can take 50% out, move stop loss to break even after that, or you can let the trade come to TP1 and then move stop loss to break even. So it really doesn't matter. At the end of the day, I just really want you guys to have a risk-free trade. So what we're going to do is simply take this buy, and we're going to see what happens. And as you guys see, TP1 immediately smashed. Now, since TP1 immediately smashed, we can simply now go ahead and take out 50 and then move our stop loss to break even to minimize this trade. One thing you do not want to do is keep your TP and your stop loss the same the whole time, because anything is possible. As we all are retail traders, we can trade with the actual market, but at the end of the day, we are all retail traders. We don't have say in moving the market. We have to play it as retail is. So we move our stop loss to break even, we take 50% out, or you can move your stop to break even to get more, but you're not losing anything if it goes left, and then we just take TP if it smash it. And then as you see, clearly we had a clear move of reaction. Now guys, when you are focusing on this, like I said, this is my perfect setup that I look for. You want to make sure you follow this to the T. Now other than that, guys, you really want to make sure you subscribe to my YouTube channel, because this is first and foremost our many videos that I got coming out. Other than that, I appreciate the love and support like always. Make sure you check out the new clothing line, Black. It isn't a link. Otherwise, I appreciate the love and support. Your boy Solo checking out. Let's get it.